Hello, everyone, and welcome to the Quantera Global Transfer Pricing Method podcast, where we aim to update and inform you on different aspects of transfer pricing. I'm your host, Adriaan van der Heijden, a director at Quantera Global. Quantera Global is one of the largest independent advisory firms specialized in transfer pricing. We have a global network in more than 50 countries, and for the last 10 years, hundreds of multinational companies trusted us with taking care of their transfer pricing projects of any complexity. We are formed in freedom and follow our own directions to deliver excellent results for our clients and partners. Our experts of today are Emile Monfils and André Oliveira, and we will be discussing the application of the OECD transfer pricing guidelines, both from a Dutch and Brazilian perspective. Emile is one of the managing directors of Quantera Global with approximately 20 years of experience in the field of transfer pricing. Emile is known for his extensive knowledge and experience in the field of intangibles, but has also advised numerous multinationals that are active in both Europe and South America, especially Brazil. We're also happy to introduce André Oliveira, head of the tax department of the Brazilian law firm Castro Barros. André is the Secretary General of the Brazilian branch of the International Fiscal Association, IFA, a member of the Practice Council of the LLM in International Taxation at New York University. André has a strong experience in international taxation, which involves transfer pricing and international restructuring, including negotiation with the Brazilian IRS on relevant tax issues. Emile, André, thank you for your participation in this podcast. Today we will be discussing the implementation of the OECD TP guidelines in Brazil and challenges that multinationals may face and local compliance burdens both from the OECD and Brazilian perspective. Now let's hear what our experts have to say on this topic. Perhaps we can start with Emile. Emile, we are quite familiar with the OECD TP guidelines. Can you perhaps share the European perception on transfer pricing rules in Brazil, also taking into account the recent alteration towards the OECD TP guidelines?
Yeah, thank you very much, Adrian. Well, I think it's quite common that it's quite challenging if you have two different types of methods of ideas on how you should deal with transfer pricing. I think that's the same case with Brazil. A lot of M&Es had challenges as they had to deal with two types of TP policies. A TP policy that might not so be consistent overall, as you had to look to Brazil, which, looking from a TP perspective, had some big differences in comparison with the OECD TP guidelines. The way on how you should remunerate, on which methods would be applicable. I think it is quite welcome that Brazil has now adopted the OECD guidelines. I think perhaps much overdue. I think it's since the 90s, Brazil has been an active partner of the OECD. So it is very nice to see that they have now adopted the OECD guidelines, which makes also the transfer pricing policy, the implementation for multinationals, much more consistent. As such, you do not have to make a difference between countries outside Brazil and Brazil itself.
Okay, thank you, Emile. And I think you already mentioned you welcome this move. How do you think this will impact also outside of Brazil? So obviously Brazil, this will impact, and we'll go to André on that question. But from your perspective, for example, in the Netherlands, do you already see something evolving there?
Well, of course, I think now when we see that with the adoption of the OECD TP guidelines in Brazil, you now also have to fulfill your TP compliance. So that means master file, local file. I think with your Brazilian operations, families were not used to preparing such a local file, for example. So I think it's still getting familiar also in Brazil with the OECD TP guideline rules, the regulations on how to the interpretation of certain articles, which might be challenging, but I think it's a good way to have a discussion when you are talking about the same type of articles and methods.
Okay. Thank you for that. André, can you give us an introduction on Brazilian transfer pricing rules and tell us more on the process developed in Brazil for adopting the OECD TP system?
Sure, Adrian. Well, at first, I'd like to thank you very much for the invitation. So, pleasure to participate in this conversation and exchange of ideas. Well, as properly said by Emile, Brazil is now undergoing a major transformation in its transfer pricing system. The previous system in Brazil was dated in 1996. It was time at that time it was designed a system to minimize complexity and offer a more straightforward approach for business by applying what we call fixed profit margin mechanism. And this has created several difficulties and problems in conciliating with information and other methodologies utilized by the international companies and groups, because it was very common for these groups to, when trying to implement their transfer pricing systems in Brazil, not to follow the OECD models because it was not in compliance with Brazilian requirements, Brazilian legislation. So has provoked some divergence on the numbers, on the information that had been changed. So creating many difficulties, many challenges in the international scenario related to these foreign investments in Brazil. The TP methods in Brazil, as I said, they were based on fixed margin and were not equivalent to the ones based on the OECD scenario. And what were the consequences of this different approach in Brazil? Well, inflexibility and mismatch with multinational practice, because under the OECD model, Brazil's system did not allow adjustments for unique business functions, for instance, assets or risks, with consequence, for example, for double taxation and base erosion risks. It was a simplified approach, as I mentioned, because it was based on fixed margins, but it was an isolated approach. So that was not possible, unfortunately, to conciliate with the methodology utilized outside Brazil. It was easier, but disconnected to the global transfer pricing practice, with creating compliance conflicts and increased tax disputes. At least in Brazil, there is in which there is a common environment of litigation. Uh, because of this, unlike the OECD model, in the analysis that we had to implement in Brazil under the previous scenario, there was a lack of economic substance analysis. It was not something that was considered. No use of comparable market data, for instance, practically no use. Risk of trade distortions. And because of this instability, a reduced investment attractiveness, because well, it's very common for some international groups to, when looking at Brazil and the idea of determining a price to be practiced within the group, not to decide to invest in the country because they will not be in a position to conciliate the methodologies applied to transfer pricing. Well, fortunately, last in 2023, we had a new law in Brazil regulated and imposing a new TP framework, more alignment with the OECD global practice. The main features of this system in Brazil nowadays, in alignment with OECD practice, is the arm's length principle. There was something that was disconsidered practically because of fixed margins. And now all related party transactions must be priced as if conducted between independent parties. So it is a principle that has to be followed in orienting all the Brazilian legislation. Economic analysis nowadays is very important. So we nowadays have to consider focus on functions performed, risk assumed, assets used, moving from the fixed margin systematic mechanism to this different approach. Some other different compliance requirements, as Emile has already mentioned, master file, local file is something that did not exist in Brazil in the past.
Maybe
now it
perhaps
is.
André, sorry to interfere. I think compliance we'll discuss at the end of the podcast.
Yeah.
Perhaps one question from my side. Are there any explicit deviations in Brazil compared to the OECD TP guidelines?
There is no deviation in principle. There are some requirements based on Brazilian legislation that will impose on the documentation level when preparing the master local files. They will have to observe some specific requirements in Brazilian legislation, but they will follow the OECD guideline. But they will have to observe some peculiarities that will be established in Brazilian legislation in terms of documentation, because of Brazilian experience in inspecting transactions, in analyzing transactions. So some information that considered relevant by Brazilian tax authority. But in general terms, it will be the same. For instance, the master file is something that the Brazilian taxpayer will be allowed to use the same master file that's being used outside. Okay. The local file can be used as well, because there is not in Brazil a specific local file that you have to prepare. So you can use the one that is being utilized outside Brazil, with the peculiarity of approaching the transactions that will be performed in the Brazilian country, so that the local and regional essence of the transaction will have to be reflected in the local file in order to inform the influence of the Brazilian transactions on the operation. Okay.
Okay. Maybe thank you, André, for that clear introduction. Maybe let's move on to the second topic, the challenges that multinationals may face. Perhaps, André, can you share your thoughts on the level of experience and knowledge of the Brazilian tax authorities and local advisors on the application of the OECD TP guidelines?
The Brazilian RS, that is the Receita Federal do Brasil, is actively training its staff nowadays, particularly in analyzing functional risk and economic methodologies in order to be prepared to assess this international transaction. It's something that has been being developed by the Brazilian IRS. Do we know that the Brazilian IRS is collaborating with international institutions that are providing some support on this field, and this is an ongoing process, for sure. It's worth mentioning that we had in the past the finance of the British government to develop this kind of expertise with the Brazilian IRS, because understands that it would be important to provide the same knowledge that would be and share the same knowledge that the OECD countries they have, in order to provide an environment that of inspection, of analysis from the Brazilian IRS that would be equivalent to the one the other taxpayers in OECD countries are subject to. And we can mention as well that Brazilian representatives of Brazilian IRS, they are in constant contact with representatives of the OECD. I had the opportunity of participating in some discussions with Cláudia Pimentel, there is representative of Brazilian IRS, and Thomas Balco, representative of OECD, in this conciliation of Brazilian methodology with the OECD one. So it is very important. On the side of local advisors, well, Brazil has a significant base of professionals familiar with the OECD guidelines in view of their work with multinational companies, their work with auditing firms, or based on the academic experience in LLM course, post-graduation course outside Brazil. But it's something that, however, is as well being developed in Brazil because it's not an experience based on the Brazilian legislation and Brazilian interpretation of our domestic role. Now we have we have this we have this knowledge and experience based on the international information and sources that we had the opportunity to develop based on our experience. But unfortunately, it is something that is a new world for everyone, for tax authorities and for the Brazilian taxpayers as well, because they have the interpretation of the new legislation has not been proven yet. So it will be something that will be subject to to concrete analysis from now on, and something that will represent an involvement of this experience in Brazil. In this context, it is very important for consulting firms and advisory firms as Quantera Group that have this experience outside Brazil and with the OECD guys to share this knowledge and experience with Brazilian firms, advisors, and to help with the implementation of this methodology in Brazil, because you're the right ones. You have been experiencing this for many years, so it is something that, well, you would be more than appropriate. Okay.
Yeah, thank you. That's perhaps also a good bridge towards the next question I have for you, Emile. How are European multinationals dealing with this transition? Can you perhaps tell us something on that?
Yeah, sure. Thank you, Adrian. I think now Brazil has adopted the OECD guidelines. Multinationals now have a certain level of comfort that the TP policy that was applied on overall, with the exception to Brazil, can also, in principle, be implemented in Brazil and used for the Brazilian operations. So nowadays also you will have to take into account the TP documentation regulation in Brazil. As André also mentioned, a local file was not really an existing topic in Brazil. But now, also with the adoption of the TP guidelines, you will have to provide a local file. I do see a challenge, and I think multinationals are still thinking on what the level and capabilities are of the local tax authorities in Brazil. André also mentioned now they are getting up to speed, trying to understand what the TP OECD guidelines, how to interpret these topics, how to deal with them. Moving from more a fixed margin to now an arm's length principle, and how to substantiate it and how to test it. So I think there's a big challenge there, and I'm multinationals still looking at, okay, how are the local tax authorities going to deal with these new aspects that they have to take into account. For example, and perhaps André can also specify a bit more on that. From an arm's length principle, you will need to substantiate your percentage. And normally what we do is to provide either a comparability analysis or a benchmark study. And now you have to think, okay, how will the Brazilian tax authorities look at such a benchmark study? Because if in this case Brazil entity is the tested party, you want to have a comparability with other companies in that region. And I believe from a more database perspective, I do not already see a lot of Brazilian companies in the database. So how to deal with those kinds of items, multinationals still wondering how it work, and what the future will bring.
Yeah, perhaps André, your thoughts on that. So basically, the economic analysis and potential comparables in Brazil.
Well, it is something that nowadays the Brazilian tax authorities, they are not imposing a level of documentation of economic analysis that would be very much different from the one that the international companies they have available, because it would be too burdensome for these groups to try to identify and develop this comparison based on at this moment based on the Brazilian market. Okay. So now we conversation that we have been having with the tax authorities and experts, the Brazilian taxpayer, they are using the database that they have and then the comparisons that they have available at this moment. Of course, that it is always advisable that if there is a Brazilian component, a Brazilian element that can be used in order to provide a more substance analysis that would attract this interpretation based on the Brazilian scenario, all of the economic elements that can derive from the Brazilian scenario would be the ideal scenario. But they are not so prepared for this, and in terms of costs, in terms of personnel. So it's a ongoing process, and I believe that regulations will come in order to determine exactly the level of details and the level of information that would be required from Brazilian tax authorities in order to adopt the new system without, on the other hand, imposing so much cost, so much burden to their reality that is, well, in Brazil, that is very tough.
Great. Yeah, thank you for that. I think we also covered basically our last topic at TP compliance, but I do have a few other questions. But perhaps maybe a final question on the transfer pricing documentation requirements. Emile, any thoughts you want to share from an OECD perspective?
Well, I think Adrian, from an OCDTP perspective, is quite clear what should be included in transfer price documentation, master file, local file, and next to that also your CBCR, your country by country reporting. I think it was already introduced there in Brazil. The master file, local file is something that I think most of the countries have been already used to, and how to prepare those kind of items, because it does provide a certain information. It provides a lot of information. It provides transparency on how the DP model is currently being implemented in a multinational, what the results are. That would also mean that you now are sharing perhaps a bit more information with the local tax authorities in Brazil. And multinational probably also think, well, how will they now deal with the information that they will receive and read in such a TP documentation report. And I'm still indeed quite curious whether Brazil will also impose certain additional TP requirements. For example, we have Italy, and if you want to fulfill the penalty protection, you will need to include certain items. And I'm quite curious whether Brazil also will now require certain items to be additionally included next to the OECD part in order to have a compliant TP report for Brazilian TP purposes.
Yeah, perhaps André, maybe as an additional question, so maybe you can answer the question of Emile, but also, are there any other compliance forms, for example, that need to be filled in? So you have the local file, master file, which may have specific local requirements, but are there also any other forms that are only relevant for Brazil? Perhaps you can share your view on
Oh,
that.
no, yeah, basically they're saying the master file, local file, the country by country report as well. There is the one provision in Brazil that foresees the simplified local file. That is something that, well, with less detailed requirements based on the, well, on the amount of that is of transactions. So it is below 2,200,000 euros approximately. It is subject to the simplified local file, not to the local file. And additionally, there is Brazil follows a digital system of providing information to tax authorities. Everything is digitalized. Everything has to be informed. So it is additionally uh, uh, the taxpayers in Brazil, they are additionally obliged to follow this system. There is an accounting and tax system that is called ECF, okay? That in which the Brazilian taxpayer will have to provide all detailed information that will be conciliated with the other files that we have mentioned. So it is very important, because if there is no connection between the information, automatically, because everything is digital, it is raise a difference that will be identified by tax authorities, and then tax authority will try to inspect exactly what it relates for. But this is additionally that I would say imposed by by Brazilian IRS, but in general it's the same as OECD.
Okay, thank you both. Perhaps one final topic is on APAs, so advanced pricing agreements. You could say an APA or bilateral APA may be a solution to tackle any of these transfer pricing related risks. André, can you give us some insights on the Brazilian APA process and its potential challenges and related experience in this field?
Well, this APA advanced price agreements in Brazil are gaining relevance. It is something very important. So Brazilian legislation is adopting this system in Brazil. The APAs are very well established outside Brazil, in OECD, well, in the Netherlands specifically, but remain in Brazil in early stages of, I would say, implementation. For you to have an idea, only last August 2024, that the Brazilian IRS has released a draft regulation for APAs. So with the proposal of aligning such procedures with the OECD standards. So it's something that is being discussed in Brazil. There are some, key points in this draft regulation that represent some challenge as well. It is referred as a unilateral APA, with a unilateral nature. So, unlike the OECD's allowance for bilateral, multilateral APAs, Brazil's draft focus on unilateral agreements.
Okay.
That we believe may increase risk of double taxation and legal uncertainty, for sure.
Yeah.
Maybe,
It is a
sorry.
procedure that is voluntary for, and it's not obliged. And even if it starts negotiation in the end, if it comes not to something that would be expected by the taxpayer, it's not obliged to finish the negotiation with the IPA. The validity is 4 years and
Okay.
extendable for an additional 2 years. It is something that, requires confidentiality, 4 stages of analysis, and very important, the decisions are final. There is
Okay.
no appeal or reconsideration
Mm.
for the decision. So it's something that is very important.
Okay. Perhaps, Emile, I think you also have experience with setting up or helping setting up the APA practice in a few European countries. Can you share your view on,
Yep,
from a
indeed.
European side for APA? So, what is the general development in the Netherlands, but perhaps broader in Europe?
Well, I think obtaining APA provides certainty for both the M&E as well as for the tax authorities. It does depend on the facts and circumstances and how they are presented. It also, in the Netherlands, we have a very mature APA practice, focusing much more now, bit by bit, on bilateral APAs and multilateral APAs. But I think Brazil is now is in the early stage of setting up its APA practice, as I hear André saying. I think it's quite important that also for Brazil, such as in the Netherlands, it's a very approachable process. So the tax authorities in the Netherlands are willing to listen and to see whether it is possible to give such a ruling, an APA. But there's also a certain trust between the multinational, the taxpayer, and the APA team, the Dutch tax authorities, that in the sense that if the information provided during such an APA process, and it will not come to an APA, what is then done with the information received from the taxpayer by the tax authorities? Will that then lead to perhaps a tax audit? Is that initiating the first audit? So there needs to be a certain kind of trust and good preparation from both sides, such as we have in the Netherlands, but also in other countries.
Okay. Yeah, thank you for that. Perhaps also considering the time, I think it's good to end our discussion. Let me try to summarize. I'll also give you both the floor if you have any comments, final remarks. But first, let me try to summarize what we discussed today. I think Brazil was known for a lot of litigation, and the Brazilian TP rules were significantly different compared to the OECD guidelines, which created a lot of challenges. So it's quite welcome that Brazil has implemented and adopted the OECD TP guidelines. The staff of the Brazilian tax authorities is currently being trained, more specifically also in functional analysis and economic analysis. Brazil may follows the general templates of the OECD on master file, local file, and country by country reporting. There may be some simplified local file requirements in Brazil when you're below certain volumes. And you have to file the local files and master files in a specific digital system in Brazil. I think the databases are currently still the same that we're aware of, that are also being used for other countries at this stage. So there's not a specific Brazilian database. And on APAs, I think Emile discussed that the Netherlands and more European countries have extensive experience in APAs. The APAs in Brazil currently still at an early stage of implementation. And also was also discussed. August 2024 draft legislation for APAs was published in Brazil, with a general validity of 4 years with extension possibility of 2 years. Perhaps André, may I first ask you for any final remarks you may have?
Yes, sure. Well, just refer that this APA proposal is under public consultation. All the agents of the Brazilian market, the taxpayers, academics, and experts have reacted strongly, and we expect the final version to be more aligned with the OECD standards, something that is very important. And one final comment is that adapting to this new reality environment in Brazil requires careful planning. It's very important. It is critical for companies engaging in these international transactions to adequately prepare for the implementation of these changes in Brazil in order to mitigate risks and avoid significant penalties that can cause in Brazil.
Okay, thank you. Emile, you have any closing remarks?
No, I think, as discussed, and very welcome that Brazil has adopted the TP guidelines. I think in comparison with the old TP landscape in Brazil, there already were a lot of challenges to be managed. Not saying now that there are no challenges anymore with the with the adoption of OECD guidelines, but I would like to stress out more that there now are also a lot more opportunities for multinationals with Brazilian operations, and that will be my last remark in that sense. Yeah.
Okay. Thank you, Emile and André, for contributing to this podcast. And I want to thank all of you for listening to the third episode of our podcast. Stay tuned for more transfer pricing topics and more guests in the future. Hope to see you all next time. Have a great day. Goodbye.
Thank you.
Thank you.
Bye bye.